If you've been looking at the charts lately, you don't need a headline to tell you that it's scary. Bitcoin topped out around $125,000 in the summer of 2025, and today we're trading in the mid to high 60,000s. That's roughly a 46% drawdown, not 10%, not 20%, almost half. And when you frame it like that, it lands differently. This isn't just a minor dip inside a strong uptrend, it's a serious reset in price. So the real question isn't, why is crypto down today? The real question is, what kind of phase are we actually in? If you're new here, welcome. My name's Paula. And on this channel, we talk about crypto and markets in a grounded way. No hype, no dramatic predictions, no pretending risk doesn't exist. Just structure, context, psychology, and how everything connects. Because surviving in markets isn't about being the loudest voice in the room. It's about being clear when things feel uncomfortable. And right now, things feel uncomfortable. But discomfort and collapse are not the same thing. Let's slow this down. From $125,000 to roughly $67,000, we've lost about 46%. In traditional markets, that would be catastrophic. In Bitcoin, historically, it's serious but not unprecedented. In 2021, Bitcoin fell roughly 55% from April to July before going on to make new highs later that year. In 2017, we saw multiple 35 to 40% drops before the final blow-off top. Bitcoin has always moved violently. The difference this time isn't just the percentage, it's the context. Bitcoin in 2026 is not Bitcoin in 2017. This asset is integrated now. There are spot ETFs holding tens of billions. Institutional treasuries have exposure. Politicians debate it openly. Mainstream financial media covers every move. Bitcoin isn't operating in isolation anymore. It's connected to global liquidity, and that's where the deeper story begins. Let's zoom in on what we're actually seeing right now. Yes, we've lost the psychological $70,000 level. That matters emotionally because people anchor to round numbers. Momentum on the weekly time frame has clearly weakened, and that matters technically. Sentiment is heavy. You can feel it in the tone of social feeds and in the language of the headlines. Words like crisis and freefall are appearing more often. But here's something that's important. Nothing is breaking. Exchanges are operating normally. Stablecoins are holding their pegs. ETFs are fluctuating, but they're not collapsing. Miners are still producing blocks. We're not seeing exchange insolvencies. We're not seeing systematic credit stress. In previous breakdowns, Terra, FTX, early 2022, the plumbing cracked. It wasn't just red candles, it was structural failure. Right now, we are seeing price stress and structure strain, but the system itself is functioning, and that distinction matters far more than the size of the drawdown. So why does this feel heavier than other corrections? Because we're coming off an all-time high. When prices fall from 40,000 to 30,000, it feels like a dip. When price falls from 125,000 to 67,000, it feels like the end of something. That psychological shift is enormous. From expansion to contraction, from optimism to doubt. Summer 2025 was euphoric. Headlines were about adoption, institutional acceleration, and ever bigger round numbers. Now the tone has flipped. But markets rarely top when fear is dominant. They top when optimism peaks. Right now, we are not in euphoria. We're in assessment. And assessment phases are mentally harder than crashes because crashes are dramatic and obvious. Grey zones are quiet and uncertain. Underneath all of this, the market is asking a bigger question. Was 125,000 the cycle high? Or was it simply the emotional peak before a necessary reset? Those are two very different futures. If this is a reset, what we would expect over time is stabilisation. Volatility cools, selling pressure exhausts, price begins carving structure again. Liquidity slowly rotates back in. Confidence rebuilds quietly before headlines ever turn positive. But if that was the top, the character of the market changes. Rallies get weaker, highs get lower, liquidity contracts instead of expands. Strength fades instead of accelerates. And that shift doesn't announce itself loudly. It unfolds quietly, and it only becomes obvious in hindsight. That's why this phase feels uncomfortable. We're not in panic, we're not in recovery, we're in evaluation. Now let's connect this to macro, because this cycle is more liquidity sensitive than any before it. Bitcoin now behaves like a high beta risk asset. If global liquidity tightens, Bitcoin feels it. If macro uncertainty rises, Bitcoin feels it. If institutions de-risk portfolios, Bitcoin feels it. That doesn't mean Bitcoin's broken. It means it's integrated. And integration cuts both ways. During expansion, it accelerates upside. During contraction, it amplifies downside. So part of this drawdown is not crypto native panic, it's macro sensitive repositioning. And that's a much more mature but more complex environment. At a 46% drawdown, emotion can easily take over. You start questioning everything. You start anchoring to the top. You start imagining worst case scenarios. But markets don't reward emotional reactions. They reward structure. And structure right now is saying this: we are stressed, we are uncertain, but we are not structurally broken. This is the reason why we built the Crypto Wolf Pack, because retail traders often feel isolated during phases like this. When price is down nearly 50% from the high, your confidence drops, your feed turns negative, and it feels like everyone else has clarity except you. You're not alone in that. It's also the reason why we built the Crypto Liftoff course. It's the exact strategies we use in the Crypto Wolf Pack to make money in both the bull market and the bear market. The link for the completely free course is in the description of this video. So here's my honest summary. Bitcoin is down roughly 46% from its summer 2025 all-time high. That is serious. It is cycle level behaviour, but it's not yet confirmed systematic collapse. Infrastructure remains intact. Institutional presence remains meaningful. Macro conditions are uncertain. Structure is strained, but historically not unprecedented. We are in a high ambiguity phase, and high ambiguity phases are where disciplined participants separate from emotional ones. The next few months will tell us more. Will we stabilise and rebuild? Or will we slowly roll into sustained lower highs and deeper contraction? That answer will come from structure, not headlines. If this helped bring clarity to what feels like chaos, hit like. It genuinely supports the channel. Subscribe if you want calm, grounded analysis without hype or panic. And in the comments, tell me honestly, does this feel like a reset to you or something bigger unfolding? Because in markets like this, clarity isn't loud, it's disciplined. And discipline is your edge. Thank you so much for watching, and I'll see you in the next one.